Good morning. My name is Drew Moore, and I've got Michael Reginelli and Brian Basting here to discuss the February USDA report. At the current moment, corn is down 2 cents, wheat is down 8 cents, and soybeans versus the May are up 10 cents. So thank you guys for being with us today, and let's get into it. Brian, what did you learn on the grain side of the ledger here today for corn and wheat?
We'll start out with corn, Drew. The USDA did acknowledge the slow pace of corn sales and shipments on the export side. They took exports down 75 million bushel. That's a pretty good chunk month to month, and basically increased carry out a like amount. So you're looking now to carry out a 1.34 billion bushel. That's not a burdensome carry out, but it's going the direction of easing the market's concern about these tight supplies. But basically the USDA did cut the Argentina crop by 7 million tons and reduce their exports by 7 million tons also. But I think there's an underlying factor here at work, Drew, and that's these high prices are discouraging some corn use now. We got accustomed to these $6.50 corn prices. I think usage is becoming a concern in terms of high prices curing high prices. On the wheat side of the ledger, Drew, I think no changes domestically here in the U.S. for the U.S. balance sheet. However, we did see some competitors increase supplies worldwide, notably Kazakhstan. We always talk about Russia and Ukraine, but Kazakhstan production was up 2.4 million tons from what it was in February, and their exports are up 1.5 million tons. USDA did also increase Australia's crop 1 million tons to record 39 million tons. Australia will dominate the wheat market the next 6 months, Drew, in terms of the Asian market, and increase their exports 500,000 tons. Bottom line, U.S. remains the residual supplier of wheat to the world at the moment, Drew.
Absolutely. Makes sense. Michael, how about the soy complex in the U.S.? What did you learn?
Yeah, bean futures off the highs a little bit, dragging down to some degree. It was a little surprising, I guess, from a stocks to use standpoint. You know, they took 15 million bushels from last month off, so 210 versus the prior at 225. Biggest changes were increase in exports. We increased exports 25 million. Some of that might have to do with just slower uptake in Brazil and pacings. We'll see if that actually holds. But the net change was a 10 million bushel decrease on the crush side. Some of that might have to do with, you know, expensive meal, $500 meal, maybe less inclusion in domestic rations. Crush margins still very good. Right. It's just pacing of crush has slowed down as guys look to clear the product.
Sure. Makes sense. Thank you. Brian, big question here. You know, South America is obviously a driver of flat price and has been here for a few months. What did the USDA say in South America today, specifically Argentina, for corn and soybean production, and how does that influence pricing here moving forward?
The USDA did take an aggressive stance today, Drew. They knocked off 7 million tons off the corn production number, as I mentioned a moment ago, and they took off 8 million tons off the soybean production, from 41 million tons to 33 million tons.
Sure.
So that's an aggressive stance for the USDA historically. Basically, arguably the worst drought ever in Argentina. So I would remind the viewers, though, that we've seen a hefty rally in beans since harvest, pushing $1.50 in terms of the futures market since harvest. So a lot of that has been built in, arguably. And Michael raised a good point a moment ago. We are seeing these meal prices pushing historic highs at $500. I just remind the viewers that historically high prices do cure high prices. So from a risk management standpoint, continue to defend your balance sheet, because we're looking at these new crop prices still at pretty attractive levels, for example, for soybeans, and also not too bad for corn either. But back to your original question briefly, I would remind the viewers that Brazil is looking at a record bean crop that they're harvesting at the moment as we speak. Those bushels will eventually work their way into the world pipeline. We're already seeing the U.S. unshipped book drop off dramatically, i.e. the Brazilians are taking over that market. And I'd remind the viewers that the corn planting is being completed as we speak. Record corn production is forecast in Brazil. Now, we've got to get through the next 60 days. That crop is not in the bin, but the bean crop is in the bin, or going in the bin as we speak. The corn crop could be a weather market, but if they don't experience a shortfall in production, Drew, the next 60 days, China is ready to buy a lot of corn from Brazil this year, and not much corn probably from the U.S. going forward.
Right. Hence the 75 million bushel reduction possibly today from the U.S. Very good. Thank you, Brian. Michael, what about the May forward corn and soybean spreads? What are your thoughts there? Obviously, we're seeing some strength in old dube spreads today. Is that indicative of May, July, May, Sep moving forward?
Sure. I mean, fundamentally, if you look at the carryout today, higher corn carryout than expectations, lower beans, you would say, okay, maybe corn spreads break a little bit, maybe bean spreads firm a little bit. Well, the fact is both are firming for reasons that aren't directly related to the report specifically.
Sure.
One of the challenges in kind of making a call on May spreads at this point is we still have 7 weeks before we see the whites of the eyes for delivery. We're not in a contract month, so we got to get through the rest of March, all of April, before we really begin to see that spread and basis converge.
Sure.
Today, what we can say is that basis in the delivery system for corn is above delivery. Beans are kind of teetering on either side. Freight is fairly cheap, keeping FOB value somewhat supported. And then the interior basis is still relatively strong. We're seeing pretty good rail numbers basically across space. Certainly strength in the west as it stretches east. As recently as today, though, some of the central and eastern Class 1 rail gates are seeing bids and offers firm. Bids kind of chase offers higher. So we're seeing a little bit of cash strength in the country. The other piece and the big question mark, honestly, that's going to drive these spreads is what's the farmer going to do? Depending on what your region is, from central to the wings of the belt, farmer owns probably anywhere from 20 to 35% of the corn remaining. What ultimately is he going to do from a sales standpoint? We're 40 to 50 cents off the recent highs in May corn. Mm-hmm. We have planting coming right around the corner. They've been in a relatively healthy cash or financial position up to this point.
Absolutely.
And the farmer's seen pretty good rallies, bail them out kind of the last couple years into kind of the heat of the summer. So is it a timing thing? Do we just wait, get through planting, and then we start seeing the balance of old crop corn move? If that happens and we start seeing any type of export interest begin to creep into the U.S. that we need to originate for, it could keep spreads and basis pretty well supported here.
Sure, makes sense. Thank you. Brian, moving forward, you mentioned Australia, being a dominant factor over the next 6 months. But what's kind of the latest and greatest out of the Black Sea region, with the corridor being open and other wheat items that our viewers should know about?
On the front burner, Drew, is the Black Sea Grain Initiative, shorthand export corridor, that was extended for 90 days back in November. Mm-hmm. That agreement will expire March 18th.
Right.
Now, needless to say, the viewers know it's an exceptionally volatile situation now in between Russia and Ukraine.
Sure.
We don't know exactly what's going to transpire day to day, much less the next 10 days. But there seems to be a little bit of an undercurrent at the moment that initiative will be renewed. That will be a big wild card, though, over the next short term, next 2 weeks here.
Right.
If it is renewed, there has been a record amount of grain shipped from that Black Sea the last 9 months.
Right.
Tremendous volumes of wheat. So that'll be something to keep an eye on. The other things to watch on wheat, Drew, we have to see the western corn belt, western Midwest, the drought. We got to keep an eye on that. It's a small area, but a very important area. When you talk about western Kansas,
sure,
the Oklahoma Panhandle, Texas Panhandle, eastern Colorado, it remains a very dire situation out there. If we don't see some improvement in the next 30 to 45 days, abandonment could be high again there in 23. But the last thing I'd note, Drew, is that India looks like they'll continue with an export ban on wheat. Mm-hmm. Their crop is maybe vulnerable now to declining here in 23, some adverse weather. But overall, the world still is in a comfortable situation with wheat, assuming that the Black Sea export corridor remains intact.
Sure. Thank you, Brian. Michael, last question for you. Should the trade be nervous or should the managed money funds be nervous as we move forward here with balance sheets getting a little bit more comfortable? Certainly, meal's got a lot of spec length in it, some overbought conditions as well.
Yeah. I think yes. I think they likely will be. There's probably a contingency out there on the meal side that's waiting to see just how far that Argentina bean crop goes. Yep. We took a healthy reduction to it today. Certainly a big swipe on the corn side. There's contingencies out there that think that we need to continue to creep lower, possibly to unprecedented territory. So I do think it'll be defended at least, maybe in the short term to some degree. But it's certainly a concern for a sell-off or a correction at some point in time, particularly as Brazil kind of begins to dominate the world export program here. On the wheat side, honestly, wheat's kind of the opposite. I feel like wheat could be susceptible to some short covering. You know, and part of the problem is we haven't seen commitment to trader data accurately updated for 4 weeks at this point. You know, so they've said that they're going to catch up by mid-March. We'll see if that actually happens. It's got to happen pretty darn quick. But hopefully we'll be current kind of by the end of the month, and we'll have a better look at that data. Right now, all we can do is kind of make assumptions. So like this past week, I think it was February 7th was the last commitment of traders.
Correct.
At the time, funds were long roughly 200,000 futures and options on corn, for an example. Rough math, like of what we're keeping here, I would tell you they've sold probably 40 to 50,000 in the last month. But again, there's guesswork in there, right? So, and I think the other thing I'd point out too is even though that's a healthy long position in corn, and you could argue maybe it's susceptible to some selling, especially as balance sheets begin to grow here, it's still the lowest long that we've seen this time of year in the past 2 years too. So they have pared down their risk compared to what we've seen the past couple of years, and I think that maybe helps neutralize the impact if they do feel like they really need to pull things in a bit.
Sure. So, very good.
Yeah.
Cool. Thank you both today. It's a pleasure having you. And if you have any questions out there, please let us know, and we'll talk to you later. Have a great day.